Hello everybody, I'm Hutan and I'm here today on Ethereum USDT and cryptocurrencies and want to check two strategies together. One is inducement of liquidity and using imbalances and order blocks for entering the position, and the other one is using indicators for entering the position at the same place at the chart. Can we combine them together? Can they help each other for us to entering the position? Or do they show us the exact point for entering the position? Let's check it out. Here I am on Ethereum USDT chart, and as you can see, market comes down here, then goes up here. And we want to take a sell. So here between these three candles and the other one between these three candles, 1, 2, 3, and 1, 2, 3. We have two imbalances. We have two gaps. One is here, the other one is here. The imbalances and gaps should be filled and the order blocks should be touched. This is our order block. Why this candle is our order block? Why can we say that? Because we should know that when we have imbalances in the past, the half of it's enough. So here, market is enough. So market touched the half of imbalance. So this block mitigate these imbalances, and it took this liquidity from this point and came down. So it tells us that I am valid. You can use me as a valid order block. And I have imbalance after this order block too in these two places. So after filling the imbalance with price and after touching the order block with this shadow, we can enter the position. How we can enter it? Very easy. Here, I want to sell my Ethereum, and I can use the limit orders for this TP and get my reward from market and get in and get out with a clear plan for my trade. I should place the imbalance. I should place the stop loss above the order block, and the entry is here with limit order, and the take profit is down here. Let's see what happened. So take profit hit, as you can see, and we have our reward near 5. It's very interesting. It's very simple. So let's check the exact place at the chart with indicators. How could we use indicators for entering this position? Let's see it. Here I've added two MACD on the chart. One is with this setting, 12, 26, 9 apply to close, and this style. Histogram nothing, and MACD goes in histogram. And the other one is with this setting. The same style, but input is 3, 6, 2. 1 to 4 ratio between two MACDs. One is 4 times the other one. This is the bigger one, 4 times the small one in this 15-minute time frame. What do we have here? We have a clear hidden divergence between the big MACD and this high. This one is lower than this one, and this one in MACD is higher than this one. It tells us that I am a hidden divergence and I want to go down. Can we enter the position right here? No. We should get more confirmation for entering the position from 2 MACD. What do we have? We have divergence between these highs and these highs. As you can see, market goes up, but the MACD goes down. It tells us I am a regular divergence, an RD. I am a RD here, regular divergence. And I am a confirmation for selling too. I have two confirmation in other direction, in opposite direction, but in same place and in same move that they are telling me I want to go down. And we can check it on a lower time frame too. We are here on 15-minute time frame. So let's go to a 5-minute time frame and see what do we have over there. The 5-minute time frame, first from liquidity and order block, we have the same thing. We have imbalance, we have imbalance, we have order block. And as you can see, market come and touch all them together. So it tells us I am ready to go down. So what do we have in indicators over here for entering the position? In Big MACD, let me make them bigger. I have divergence, as we've seen it on 15-minute time frame. This MACD in 15-minute time frame was the smaller MACD, But here is the bigger MACD. And you should notice that 5 minutes and 15 minutes are near 4 times together. And they are very regular time frame that everybody can use, because that we are using this 2 time frame, because we can see so many things in this 2 time frame. And this is a hidden divergence too, as we've seen it on 15-minute time frame. But here in 5-minute time frame, in a smaller MACD, we have divergence too. Can you see it? And with this divergence, we have another very important thing that we can see. We have a hidden divergence here in this MACD between these two lows. But what does it tell us? It tells us I am triangle pattern in MACD. And this is very important. A hidden divergence and a divergence. It tells us that I want to end my move from going up and I want to go down. And another important thing that we can see it here from this point, that we have this hidden divergence with this low and this move. These two moves are near together from size, I mean 100%. And here we have order blocks and imbalance in a higher time frame. The important thing is that when market comes down and this is hidden divergence and you want to go up, we have 2 places to put our TP for buying, I mean. What do we have? We have 15% and we have 100%. This is another sign that tells us we are at the end of the cycle and we want to reverse the price. So we can use MACDs for entering the position. And why I'm using these 4 times MACD, 4 times together with 1:4 ratio? Because it has so many details. And we can use it on other time frame and we can use it in different ways. We will talk about the details more than this later. So let's see the result for selling as we've seen it before. So the TP hit. And we can use in another way. When you're using indicators, a stop will be smaller because we are in a hidden divergence here too in this pullback. When market comes down and then goes up, in this pullback we are in a hidden divergence too. And we have so many confirmation that we can use it for entering the position. But with those, we can make a very clear and a very faster TP. Good luck.